Thank you. Item 4, period open to the public. If anybody in the audience would like to address the board on any item that is not on the agenda, please feel free to do so now. Item 6A, consideration and possible action on the minutes of the board meeting of September 11th, 2018.
I'll move on minutes.
Second.
Are there any questions on the minutes?
No, but I'll be abstaining because looks like I was late to the meeting.
All in favor indicate by saying aye.
Aye.
Opposed? Approved with one abstention. Item 7A, Finance Committee. Committee Chairman Donato, do you have a report?
Yes. Finance Committee met yesterday, went over several items. And so the first item right now is going to be A1, the presentation by PFM, our consultants for the quarterly update. So
Richard Babbe is here from PFM and he'll provide that presentation.
okay.
Go ahead. Thank you very much. I appreciate the opportunity to be here today. Go ahead. Thank you very much. So this slide sort of outlines sort of the key takeaways for what we saw in the quarter and how the portfolio performed. One big thing that sort of to preface my whole presentation is the portfolio's done very well. It's done what you wanted to. It continues to perform well, given where we've seen interest rates do over the past couple of years. What a broader question is, and I want you to think about as we do the presentation, is where do you want things to be in 2 years? Because where interest rates are will be different in 2 years, and what the outlook will be will most likely be different in 2 years than it is today. And it's not that I see things changing tomorrow, but when we look at things, over time, things will change. So when I go to this slide, as far as economic conditions, basically economic growth strengthened over the past year, as we'll see on the next page. Labor market very strong, unemployment at 3.7%. Average monthly growth is over 200,000 jobs per month in the past 3 months. So again, very strong numbers. Inflation at about 2% on a global or a national scale from what the Fed's looking at. Gives them latitude to do things, either raise rates or not raise, depending on what they feel like. Though there are things and interest rates have increased significantly over the past couple of years. But we are starting to see things in the horizon that could start impacting economic conditions. Whether it's trade concerns, whether we're having a trade war with China, what the impacts will be on that. Higher interest rates. We've already seen housing start to slow down. Higher mortgage prices, higher mortgage rates, and other impacts on that, geopolitical things that could impact the trajectory of economic growth. So what does that mean for the portfolio itself? We continue to actively manage the portfolio according to the strategy we have outlined for the portfolio. The portfolio has definitely benefited from higher rates. As interest rates gone up, your portfolio is adjusted very rapidly, but there has been some market value depreciation, especially in the beginning of the past 12 months. With interest rates trending higher, the portfolio's relative short duration has been a benefit because it's adjusted very quickly. But if we hit a point where interest rates peak or start going down, a shorter duration will adjust quicker down also. So that's something to think about long term. And we'd also continue to look for opportunities to add value. So the next slide is just general market conditions. Upper left-hand corner, GDP through the third quarter. Second quarter was 4.2%. Third quarter was 3.5%. The rolling 4-quarter average came in a little bit over 3%. Very good, strong number. Expecting slightly slower growth in the fourth quarter. Inflation measures, as I indicated, upper right hand, that beige line is the Fed's preferred measure of inflation, the PCE core number, and it's at the 2% what their target is. So that's high enough that they don't feel that they can't raise interest rates, and it's not so high that they feel they have to rapidly raise interest rates. So it gives them latitude. Unemployment rate, as I said, bottom left-hand corner, 3.7%, 49-year low, very strong. Consumer confidence, continues to be at a very high number. I think we're at a 18-year high on it, if I remember correctly. So those basic economic indicators for what we've seen in the past and what we see for the near term are generally very favorable. The next slide is just to show you, the table shows you quarterly, what the 2-year was at different parts of each quarter ending and what the change is for the quarter. But if you look at the chart from December of 17 through September of 18, you know, we went from 189 to 282. Very strong upward growth. And given where rates are right now, it's sometimes easy to forget that the average of the 2-year Treasury for the past 10 years was 80 basis points, not even 1%. So, and when I looked at the 2-year Treasury, it was about 189 today, slightly up. So for example, we've added some more corporate notes, we've added some negotiable CDs, we've come down on some Treasuries, because that's where we saw the opportunities. The one thing is, when you look at this, you don't always see what's happening. So we added a slide on the next page. The beige bars are anything that's a sale or a maturity, and anything that's a blue bar indicates what we purchased during this quarter. So what it indicates, for example, on agencies, even though it went down by 500,000, there were still a number of purchases we made during the quarter with agencies when we saw opportunities. The only thing that we didn't buy any new treasuries, that was the only one. But everything else, it's basically a buy and a sale because we're actively managing. So the net change doesn't always indicate the full realm of activity we've done during the quarter. On the next slide, it's just a general snapshot. Again, upper left-hand is the credit quality. You'll see some in the BBB category. That's because we use S&P ratings for consistency, but all securities meet the requirements of the California Government Code and your own business policy. The upper right shows a diversified portfolio, just sort of relaying what we had on the prior page, or 2 pages prior. And then the bottom is just the maturity distribution. And again, everything based on the strategy matures in 2 years or less. You know, again, rising interest rates, that's really good because you're rapidly adjusting to that. But again, if we hit peak interest rates or interest rates begin to fall, you know, having everything short will mean it adjusts all the way down also. So it's something to think about what's going to be happening. This is just showing you a sector distribution over the past couple of years on a quarter-by-quarter, past year over the quarter-to-quarter basis. Again, we just like to see a lot of quarters because we want to remain well diversified. Protects you against any impacts with any particular sector or any particular issuer. On the next page, this is your total return portfolio performance. We show it for the quarter, the year, the past 3 years, and since inception. If I was comparing this to a longer duration portfolio, especially over the past year, your portfolio performance has been very strong because a longer term portfolio would have had more market value depreciation. Again, faster interest rates go, longer securities are more impacted by that. Your shorter duration has been sort of mitigated that market value depreciation and rapidly adjusted. But again, as we look forward, that's going to have the impact going down. What I wanted to show you on this is you can really focus on the blue boxed area. What this is showing you on a quarter-by-quarter basis, how your portfolio performed on both a market value basis, which is the top 3 bars, and an accrual basis on the bottom 3 rows. And what we see is that at the beginning of fourth quarter of 17, interest rates coming up rapidly from a very low point, there was significant market value depreciation in the portfolio. But as we've gotten over longer, as interest rates are higher and they're not increasing as rapidly, market value depreciation isn't as significant. In fact, you've seen market value appreciation in your portfolio in the past couple of quarters. But if you compare the numbers, that you'll see that in the market value basis, your earnings over the past 12 months were $358,000. But if you look at it on an accrual basis to take away unrealized gains and losses, your earnings over the past 12 months have been $405,000. So again, it's important to look at both impacts and how it impacts your portfolio. On the next page is where we're starting to think about, well, things have been good for now. Interest rates have been coming up, economic conditions are strong, but you know, when does the party end? The table on the right is giving you various economic indicators and sort of a shading indicating whether we're early, mid, or late in the expansion of what that indicator suggests. And you can see it sort of mixed, but I would suggest that it would indicate we're towards the middle to end of the expansion. In fact, if we hit next July without a recession, which I would think we would, this would be the longest U.S. economic expansion on record. So again, but people are starting to think about when does the party end. The chart on the right, the blue line's the one I want to focus on, and then the shaded bars. The blue line is the leading economic Conference Board Leading Indicators Index. So it's a composite of a bunch of indexes that look forward. Right now, the leading indicators is continuing to trend up, which suggests, at least in the near term, economic conditions are likely to remain strong and favorable. But what we often see is that the leading indicators will peak 12 to 18 months before we start having a recession. So again, we're not at a point it's peak, but these are the things that people are starting to look at. How close to the end, how close to recession are we, which will suggest how much more we'll get in interest rates and affect the strategy. So the last thing that I want to end on is that this is the dot plot. I've shown you this before. Individual dots, or FOMC members, their assessment of what the appropriate Fed funds target rate should be at the end of each of those periods. What it suggests right now is for 2018, the consensus is we'll see one more hike this year, one more 25 basis point hike. And that would be at the December meeting. The market probabilities are about 75% that we'll actually see that. From the dot plot, you would suggest there'd be 3 additional rate hikes next year based on what the Fed sees, based on what they think their projections indicate to be. But we're starting to see real debate on whether that's the appropriate market action. You know, in a sense, the market, especially the equity markets, is worried that the Fed will overreach, that it'll raise interest rates too high. So right now, their forecast is 3, but we'll have to see if that actually develops depending on economic conditions develop. But it would also suggest that, you know, in 2019, we will be approaching probably peak interest rates based on current economic forecasts and trends. Again, depends on how things actually develop. But right now, you know, we're a lot closer to the end of the interest rate hike cycle than we were a year or 2 ago. And again, that sort of thing. Your portfolio is doing well right now, continues to do well, likely to do well for the near future. But you start to get to the point where do you want to be in 2 years and where do you want to be beyond that? And the rest of the presentation is just detail about the portfolio. It's very well diversified and it has the specific holdings. So that concludes my presentation unless there are any questions.
Any questions? Thank you, Richard.
Thank you. I appreciate the time.
You're welcome.
I would make a comment. If you look at your finance report, Teresa went over this yesterday, showing our return on investment.
Do you want to vote on the PFM?
What?
You have to vote on accepting the report.
I'm talking about the report. But I was going to say in our, okay, in our, so if you, it ties into what PFM investments, of all our investments we have right now, we receive the highest return on our investment from the company. Is that correct, Teresa?
Yeah, if you move ahead in your packet to.
A lot of-
I should turn the microphone.
This is important for the board to understand.
Okay, so if you move a little ahead in your packet to the treasurer's report, on page 2, there's a graph on that page. In the top left corner shows the different portions of our portfolio and then the yield to maturity for those. So you'll see that our portion of the portfolio that we have with Wells Fargo is at 1.883, and the PFM portion, yield to maturity, what he gave you was total return. I show you yield to maturity so we can compare the same number. and PFM is 2.350.
Yeah, and this is net, not gross, that's something sewer
It's
service.
net of the fees.
Yeah,
Yeah.
okay. So, and then we go, so I go ahead and move will be approved, board order 7A1, from PFM Consultants.
I'll second.
Any more discussion? All in favor indicate by saying aye.
Aye.
Opposed? It's approved.
Okay, so, yeah, so keep it going up. It's a very interesting market right now because the stock market's flipping around, like you said, like a fish out of water. What we're concerned, a lot of us in our industry, is they move the housing interest rates up too fast, too quickly. And a lot of people don't understand that because I don't think anybody in this room, maybe there's been a couple in here that were born when there was 3.5% interest rates. And to get somebody to sell a 3.5% interest rate in a home, to move at a 5.5% interest rate, it just ain't gonna happen. So it'll be interesting to see what they do with those, the home interest rate. Like you said, didn't you say the wholesale rate's 2%?
The what rate?
What is it, what's the discount rate?
It's 2 point, I should know, I forgot, it's 2 point something. It's right now.
Yeah, low twos, isn't it?
Yeah, low twos.
Yeah, yeah. And ours is 5.5. It just doesn't make sense that it moves so regularly. Okay, so let's go to item A2, consideration of possible action to accept and file the check registry list for October 18th through the 7th of November. And you want to touch base on anything?
Nothing in particular. The finance committee went over it in pretty good detail yesterday. Everything seems to be appropriate. So,
Okay. I'll move on to board order 7A2.
Second.
Any more discussion or questions? All in favor indicate by saying aye. Opposed? Approved.
Brings us to A3, consideration of possible action to accept and file the treasury report for the month ending October 31st. I move that board order 7A3.
Second.
Any more discussion? All in favor indicate by saying aye.
Aye.
Opposed? Approved.
Before we move on to the next board, I just want to let the rest of the directors know that we go through this extensively in our meetings, so. Okay, so A4, consideration of possible action for agency replacement vehicles. And so who's going to give that presentation?
yes, I'll provide the information on that, and then if there's any specific questions, John's here to answer those. The board approved replacing a van for the electricians. It's a 2010 3/4 ton vehicle in the budget that was approved by the board. The staff went out to solicit bids. We sent the bids to, it's like 1, 2, 3, 4, 5, 6, 7 local dealers. The apparent low bid was Antelope Valley Ford for $23,211.76 for that particular item, and this is below the actual budgeted amount. We're actually going to be, I believe the budget amount was $35,000, so even after this van is fully equipped with the extra shelving and other materials that are going to be necessary to make it functional, it will be well below what we had planned for the project. So with that, staff would recommend awarding the replacement of the vehicle to AV Ford for $23,211.76.
I'll move to approve board order 7A-4.
I'll say.
I have one question. Did we trade in the other one?
We did.
So that comes off that,
That's, there was a $4,000 allowance for the trade-in that came off the price.
so we take that off the 23?
No, that's with.
That's with the trade-in?
That's
Oh,
with the trade-in.
okay.
That's how it's been. So each one would be valued or traded in, and what they were willing to give.
Any more questions? All in favor indicate by saying aye.
Aye.
Opposed? It's approved.
Okay, that brings us to A5, consideration of possible action on the agency landscaping maintenance contract award. And
Yes, I'll go
Wayne,
ahead.
Wayne, can you touch base on that?
Yeah, I'll go ahead. Agency staff developed a landscape maintenance scope of work. As you know, with the new building and the new landscaping, there was a need to redo the current contract. And we mailed that a bid package to 6 local landscape contractors. We had the scope of work was posted on the agency website. Proposals required to turn in on Friday, October 26th at 10 a.m. We received 2 bid proposals, one from Alpha Landscape Services for $975. The second bid was for Bill's Landscaping at $750 per month. And staff is recommending that we approve the 3-year agreement with Bill's Landscaping at $750 per month. Their current, so that concludes my staff report unless there's any other information. Questions?
I'll move to approve board order 7A-5.
Second.
I had a question. So currently we were paying $260 per month.
Correct.
So are we, the amount of landscape that we're going to, is it gonna be like 2 or 3 times more?
Yes, but one of the bigger things is the JPA insurance that's required for this contract was previously required. And so that'll fully protect the agency should there be any issues with regards to that. Also, there was a more fully developed contract, the scope of services, so that it's kind of a soup to nuts kind of landscape service so that everything is included.
I had two questions. Go ahead.
Oh, and I want to bring up one more thing. Also, we learned we have to pay prevailing wage. And a lot of landscapers don't offer that because we're a governmental agency.
That's correct.
So you locked it in for 3 years?
Right.
Okay, 750, so that's.
Right.
Okay. And who was the other bid from for 975?
That was from
Else.
Alpha.
Alpha.
Alpha. And where'd the other 4 bids go?
They didn't return. So they didn't.
No
submit
response?
that.
So
No
only
response
2
to this.
responded?
Correct.
I
And
guess there's a lot of work out there right now.
well, yeah, and I think it has to do, there's a lot of work around there, and as you mentioned, it's the prevailing wage and the insurance requirements that many landscapes aren't prepared to do.
And I really think that's part of it, but I think it's the insurance policy that's a minimum requirement, you know, to cover the agency, which is not, you know, a lot of people don't have that.
What is the agency require?
Whoever Jake, what is,
JPI
what, at least $1 million
requirements.
probably.
I can look into it. Thanks, Ben.
Any more questions or discussion? All in favor indicate by saying aye.
Aye.
Opposed? It's approved.
Okay, that brings us to A6. Consider possible action to approve purchase orders over the $25,000. And we got A61, municipal fiberglass tank repairs of 102, 500, and
I will ask John to come up
John will
and
come up
provide
here.
that presentation to the board.
Thanks, Dwayne. As I think you know from last year, every year we have hypochlorite, sodium hypochlorite tanks that have to be rehabilitated. The lifespan of those tanks is typically about 12 years, and then you're on borrowed time. Our tanks are going on close to 14 years. So every year we try to do 2 or 3 of these tanks. The cost to replace them is over twice what it costs to repair them because of the new seismic requirements. So several years ago we went out, we sought out firms that would do this work, and nobody was real interested in doing it because of the confined space and so forth. We did find a company, and they kept pointing us to this American fiberglass. We contacted them, they came out, did a great job, and we've been using them ever since. Their prices per capacity of the tank have not really escalated over the last 4 years. They've kind of held their price for us. They're turnkey, they're very dependable, and they're quick. So we're going to do 3 tanks this year, and I would think we have about 2 years left, and all the tanks are going to be good for the next 12 years or so. We are going to, next year, solicit bids again, just to keep American Fiberglass honest, and also to see if there's somebody else out there that might be interested. So, but this year we recommend going with American Fiberglass.
I'll go ahead and make a motion on order 7A 6.1, that we approve it.
I'll second.
Any more questions or discussion? All in favor indicate by saying aye.
Aye.
Opposed? Approved.
Okay, brings us to A-6.2, R&B Foundation for $91,305. John's going to explain what that is.
Okay, similar to the tanks, an actuator is an electromechanical device that opens and closes a valve. And we probably have, just at the Quartz Hill plant, close to 100. And the lifespan of those is about 25 years. Some of those are going on almost 40 years old. So we've been doing 8 to 10 every year, upgrading them. You can't get parts for these old ones either, they're obsolete. So we've been upgrading them to these AMA actuators. They're very efficient, very low maintenance. And we have about 3 years left, and that project will be done. So those valves, actuators will be good for the next probably 30 years, which is really good news. This company is the West Coast distributor on R&B Automation for these AMA actuators, and we try to standardize for spare parts and for maintenance. So we've gone with these AMAs, and they're very good. And this company, better than their price is their service. Whenever we've had a problem, within 24 hours they're up. They take care of stuff, they machine their own parts, and they've really helped the agency. So that being said, we'd like to replace 8 more at Quartz Hill and get us that much closer to being done for this project.
How do these actuators work?
They're electromechanical. So what you do, for instance, when you're backwashing the filter, you have 4 valves per filter. Some have to open, some have to close during the backwash cycle. So on the computer, they initiate a backwash, and the PLC tells this valve to close, this valve to open. So you can imagine every year how many times these things are moving back and forth. And we've had no problem with these new ones. They're pretty fantastic.
I move up board orders 7A 6.2, that we approve the R&B automation system.
I'll second.
Any more questions?
I will just add that we came in about 5,000 under budget on this
Good job.
project.
That's
Yes.
good.
Oh,
Great.
Thank you.
good job.
All in favor indicate by saying aye.
Aye.
Opposed? It's approved.
That concludes my report,
Thank you very much.
Mr. President.
Item 8A, General Manager's Report. Dwayne?
Thank you. Board President Dias, members of the board, this general manager's report for November 15, 2018. As we all are fairly aware, it's been dry up north. The 10-day forecast is mostly sunny and warm through the weekend, and dry, relatively mild condition forecast for the Feather Basin. So it doesn't look like we're going to get any early winter rains. Here's the graph to show you how poor it's been. As you can see, the blue lines are what we typically receive in a month on average. So here's October. We don't get much rain, but we got less than that. And here we are in November, and we're only 13 days in, and maybe things will change towards the later amount. But you can see we're going to be looking for the next 3 or 4 months as being the real rainmakers for providing additional water for the system. The good news that we have is that most of the reservoir conditions throughout the state are at, especially south of the Delta, are at average levels. We can see that the San Luis condition is 107% of average, about 60% full. So we're a little above average there. Lake Orville's down just because of the construction work, and so that'll go back to normal over the next year or two as they go back to normal operations on Lake Orville. Here's the graph that shows where the lake level is. It really is way down here in this lower area, so we're well below. This is the San Luis Reservoir, and you can see we're in pretty good shape there, pretty much on average. So that's nice. As far as the state water project, we had 35,000 last year, and we received our 53,288 acre feet. One thing to mention, we've had several different updates on the spillway, but DWR was able to meet its November 1 public safety milestone for Oracle Dam, so the spillway is fully reconstructed, and it's met its where it needed to be, and it's back to its original capacity of 270,000 cubic feet per second. So they did quite a bit of work there. They still have some work around the spillway to do. That'll probably take into probably July this year. But by and large, it's really been repaired and it's been reconstructed. And maybe next next meeting, the meeting after, there's a real nice video. Kind of shows how this construction progressed and that DWR prepared. We'll provide that to you.
Dwayne, is the emergency spillway done also?
Yes, emergency spillway is complete, along with the primary. So they're both complete, and they look pretty good. So.
How much did that cost?
Well, it's, I don't have the exact numbers for you. I can tell you that, as is always the case, it's over budget. So, but the important thing, I think, is the fact that is they did receive some federal assistance, emergency, FEMA money to help mitigate some of those costs. So we'll see how it all pans out. They're working on the final accounting now.
So I'd imagine they're really confident that a nice big storm can go down.
Yeah, it's certainly when you have a structure of that size and complexity to have it built the way it was rebuilt. It was built to new standards and all of that, so it has a lot more strength than the original spillway had. So our looking here on a more local level, current deliveries are 38 million gallons a day, about 117 acre feet per day in those terms. You can see that right now our current flow in conventional treatment plants is about 26 million gallons a day, and geopurification is 12 million gallons a day to make up to 38. A little less than we were at this time last year. When you look at the conventional treatment plant, here's the numbers. Primarily, most of the water is coming out of the Quartz Hill plant. Roseman plant's currently off with the filters having new carbon installed. And we still do have about 1.3 million gallons a day coming from the East Side Water Treatment Plant. And then from the geopurification side, 1.3 million gallons generated from the East Side Water Bank. The West Side Water Bank is 5.4 million gallons a day. That's, as you can see, the north feeder has 4.3 million gallons. This is because the Roseman treatment plant is off. And the west side to the south, LA Waterworks is 1.1 million gallons a day, which is necessary to maintain the health of that treated line.
I have a question.
Sure.
I think their number's wrong on the last year's flow. It should be 13 point something. These are 7.2. I'm adding 7.2, 6.1, and 1.1.
Let's see, 7.2.
That's 13 point something.
Right, yeah, your total's wrong, correct.
Okay, so
Yeah,
we
yeah.
pumped more water last year than we did this year.
Yes.
Okay.
Yes, yes. Which would correspond to the numbers I mentioned a little bit earlier. Good catch. Okay, so as far as recharge goes, groundwater storage, we're still doing some groundwater storage on the east side for that project, but as far as High Desert and the West Side Water Bank, those are both off. From a water quality point of view, total organic carbon remains steady to a moderate rate in the aqueduct. We still have some fairly high bromide levels. However, the good news is our in-house THM tests that we performed shows that our Leona Valley levels have decreased over the past month. And so part of that's just operational fine-tuning and customer use patterns. You know, they seem to be using a little more water for some reason, so that helps. And then our THMs remain low in our Acton, East Side, and Roseman systems.
What's operational fine-tuning?
In other words, that's making sure that we get as fresh a water as possible to keep the tanks from getting too much water in them, so that they can, the key to THM removal is to have not try and avoid long detention times. So whereas you have customer use and less reservoir volume, that will provide a better quality water because you create THMs over time. Our average annual THM values are expected to remain below our goal. So we'll see how the sampling goes, but in-house sampling tends to want to confirm what we're going to get when we do our actual sampling. There was a question at the Finance Committee meeting with regards to the S-Power payments made to AVEK versus for the purchase of the bench range and lease of the Clandon property. I provided you a couple of sheets here at your desk, which shows that they're all current on their payments. For the option payments, we have till on the Clandon property, there's another $450,000 in option payments up through November of 19, as you can see at the bottom, remaining option payments. And then also for the Bench Ranch property, there's another $3,000 in remaining option payments through August of 19. So you can see those options will sunset towards the August and November of 19.
So, next year, basically, and the next year, they gotta make a decision if they're gonna do
Well, they better do something between now and the end of those options, sure. Yeah. And as I mentioned, there has been considerable contact on the Bench Ranch parcel in the last few weeks. So they understand. Looking at status and updates, we have a Navy State Water Contractors meeting Thursday night at 6 p.m. over at Palmdale Water District. On Friday, we have a tour of the Cadiz Ranch that's scheduled. The Aqua Conference is Tuesday, November 17th through the November 30th. We have a special board meeting for Water Master on December 5th. We have the Seafee Roundtable on December 6th and 7th, and the Colorado River Water Users Association Conference in Las Vegas on December 12th through the 14th. My schedule, I'll be in Sacramento the next couple of days for State Water Contractor meetings. I'll be back up to Sacramento in 2 weeks for a operations meeting. Otherwise, I'll be here around, and so that concludes my my report. If there's any other questions, I'd be happy to try and answer them for you.
Any questions for everyone?
I got one. Where's the CFE at?
That one's in San Diego.
And the one for meeting at the Palmdale Regional Airport, is that through FOP?
Yes, I believe so.
What did you say, Mark?
The tour of the Cadiz Ranch,
For the plan.
I believe from Palmdale Regional.
Oh, yeah, yeah.
Yeah.
Any more questions? Thank you, Dwayne. Item 9, Director's Reports.
No report, thank you.
Mark? Shelley?
No, thanks.
Frank?
Yeah.
Justin?
Nothing.
Gary?
No thanks.
Thank you. Item 10, Attorney's Report. Lee?
Nothing.
Okay. Item 11, Closed Session. What items do we have to go into closed session?
Closed session on item D only.
D as in dog. All right, thank you. Do I have a motion?